Hi, I'm Garrett Cayet, SFMG's Chief Investment Officer. I want to recap the fourth quarter and provide some thoughts on markets for 2024. So in the final quarter of the year, markets got off to some weak footing, but eventually experienced a sizable shift higher to end the year. In addition to digesting the October 7th Hamas terrorist attacks on Israel, stocks and bonds were also being pressured by surging treasury yields all through October, with the 10-year yield ultimately reaching roughly 5% on October 19th. Market sentiment shifted, though, when Fed Governor Chris Waller hinted at the end of rate hikes and the possibility of rate cuts. Stocks and bonds reacted positively to that rumor, rallying all through November, and the rally actually accelerated in December when the Fed confirmed that stance, signaling the end of their rate hiking campaign and forecasting up to 3 cuts in 2024. Various inflation metrics also continued to decline, which helped boost investor confidence even further to end the year. So coming into 2024, investor optimism felt quite high. It's being driven by a few different narratives: the accommodative Fed, resilient economic data, and declining inflation. And while that environment seems positive, we do still believe caution is warranted because investors at one point were pricing in up to 6 rate cuts in 2024, which is a very aggressive assumption. And if that proves to be untrue, we believe volatility will pick back up for both stocks and bonds. As for economic growth, although it was resilient in 2023, again, if those rate cuts don't come to fruition, interest rates remaining higher for longer than people expect, we believe will have an effect on slowing consumer spending and economic growth. The presidential elections will also be a major focus throughout the year. Elections do ultimately bring uncertainty and volatility, so we'll be monitoring how that outcome may influence economic growth and corporate earnings, which history shows end up being the longer-term drivers of market performance. We're also mindful of some of the ongoing geopolitical issues beyond the US elections that do have the potential to be outliers in how they impact the markets. And finally, in thinking about the stock market, we are still looking for signs of life outside of the big tech sector, which accounted for nearly 2/3 of the S&P 500's total gain for 2023. In fact, we did see sectors like real estate, financials, and industrials all outperform the S&P 500 on a total return basis from late October and into year end. So we are looking for a continuation of that broadening leadership to gain confidence that the current bull market rally is sustainable. We'll also be looking for opportunities in some of those sectors that have lagged the S&P 500 significantly over the past 12 months and may be poised to catch up. Thank you for listening, and if you have any questions about the markets or your portfolio, please feel free to reach out to your SFMG team. Thank you.